Joining us with today's market analysis is Dwayne Bussey with Bolt Marketing. Well, after a bloodbath on Wednesday, grains ended mixed on Thursday, but wheat, we did see some follow through technical selling pressure and a lower day by like 20 to 30 cents in the three exchanges. So what do you think? Did we put key reversals in those markets, Dwayne?
I think we're about to, with another lower trade tomorrow, we could actually put in a weekly key reversal lower and obviously a sharply lower off of the highs from the week, and not a good technical picture at all. I think the main driver today is kind of a buy the rumor, sell the fact. We rallied based on thoughts that this Kansas wheat crop was very poor, the Southern Plains crop is so poor, and it is. But the Kansas wheat crop came out with numbers that are really dead on what USDA had last week in their USDA report. So maybe a buy the rumor, sell the fact here.
Yeah, 37 bushels per acre for the second day. I think we all thought those would be a little lower.
Yeah, I really did too. Where they were going on day two was some of the worst drought areas and thought the numbers would be pretty drastic. But, they have had rains the last maybe about month here or there. And sometimes it kind of trains just enough, just in time to save that winter wheat crop, like happens quite often, doesn't it?
Another day of very disappointing weekly exports didn't help, though.
Boy, that's right. That's one crop I can say we've been rationing demand for quite some time, especially in the U.S. We're the highest priced wheat in the world, and nobody's buying from us right now. We rally the futures market on what we think could happen this fall if Ukraine is not in the market and all the sanctions on Russia and problems. Europe's getting dry. There's a lot of bullish stories out there, but it's possible this wheat market got a little too far in front of its skis here, you could say a little bit, and maybe we got too high too fast.
Yeah, we were probably due for a correction. We had like $1.52 put on in a pretty short amount of time in all three exchanges.
It's exactly right, and you notice the volume was getting really light, and some people were even saying the market's broken a little bit. No one could really trade it. I know I sure didn't want to trade it. 20, 30 cent swings in the overnight market made it really hard to trade. So maybe we got to do some back and fill, like you mentioned, correct the overbought condition, then find what's more of maybe a fair level, and maybe find some export demand would be nice too.
It would be very nice. So let's talk about the corn market, kind of mixed. We were like a penny higher in the July, down about 4 cents on the new crop December, but I felt like the market held up pretty well considering the wheat market was down as hard as it was.
It really did. There again, you actually got strong demand, export demand for corn. You got strong crush demand for the ethanol facilities. So there's, another crop that I can actually say, no, we haven't rationed any demand yet. Then we still got the questions and concerns in the northern plains of getting this crop planted, right? We got a ways to go yet. And our temperatures up here in northeast South Dakota are going to get right down to about freezing over the weekend and highs of 50. So that's not going to help us get going in the field. Some guys are starting to go, but it's a slow process, and to be honest, we're mudding in some of the crop here, which is not good long term either.
So what's the talk about prevent plant up in the Dakotas and Minnesota?
There's going to be prevent plant acres. How much is going to be, that's going to be a huge question. North Dakota is supposed to have 3.6 million acres of corn. I'm projecting at least 1 million acres of prevent plant there. Minnesota, probably 1 million acres, maybe a half in South Dakota. And really, Michelle, when you look at the S&D tables, you take 2-3 million acres off corn, you got a serious problem. We're too tight. And I just mentioned that we're not rationing demand at $8. So kind of a bullish situation here set up for corn, I think, in the short term and long term.
Yeah, you mentioned not rationing demand, and obviously the bull spreads are working there, an indication of underlying demand, maybe some export business. So do you think we'll be seeing some here maybe on Friday morning or not?
I don't know if we're going to see a daily sales announcement or not, but you're right. The bull spreading usually does suggest that's happening. I think what it is I think it's a strong basis in domestic market. I think the ethanol plants are having to bid up for it, so they're probably pulling it away from the export market. But you're right, with the Southern or South America crop, the safrinha crop, kind of hot and dry here as that finishes off. Their size of that crop is definitely in question. So if China needs the corn, they probably are going to have to come to us.
Gotcha. And national corn basis levels, as you mentioned, I think we're at historic highs there. So again, the bull spreading probably a result of that. What about the soybean market? There was one where we did have a strong day, I think up like 28 cents on the nearby contract, but we had very strong weekly exports. There's talk of China business. So that kind of combined to push the market today.
Yeah, absolutely. If USDA is going to have to increase the old crop export demand, that's just going to in turn lower our carry in for this new crop. And of course, we've already talked about the prevent plant and the issues in the northern plains. I mean, we could lose soybean acres too, obviously, if this weather doesn't turn around. And therefore, then the new crop ending stock gets very tight. Now, all that being said, I guess I'm actually turning into a seller of new crop beans here, and I actually suggest getting rid of the old crop too. Sometimes markets top out at the highs, or not, they always top out at the highs, I guess. But when the news is the most bullish, sometimes we top out. In this soybean market, I wouldn't be shocked to see our government step up and do things to make sure we get some more soybean acres planted this year. Whatever that is, I don't know the details, but I could see something like that down the road.
Soybeans also got some help from higher soybean meal. So is that market reacting to maybe China coming off of some of those COVID restrictions, or did we just bounce technically because we had kind of hit 3-month lows there?
Maybe it's more technical because the China COVID thing is on one day, off another. They're coming off restrictions, and then I read this morning that there's possibly a new COVID variant in China, and that strokes some fear into the markets. But overall, the complex was up. Might have been some spread unwinding too. This has been an oil-led rally for a long time, but now news overnight that Indonesia is going to back off their palm oil export ban sent our oil market down and the soybean meal market up. So maybe some spread unwinding there as well.
Yeah, that certainly makes sense. In terms of that ban, Indonesia coming off the ban, we're still kind of in question about what India is doing yet, aren't we?
Yeah, every day, right? Ban on, ban off, kind of like kids out playing hockey in the yard, game on, game off as a vehicle drives by. It's been kind of frustrating and very hard to trade that stuff in the short term, because it's on one day, off the next. Kind of like the outside markets too, where we talk recession for a while and then we get comfortable again, on again, off. Yesterday I looked at the grain markets and felt like, man, we crashed really hard because basically Target and Walmart didn't make their retail sales goal for the first quarter. Well, I don't know what that really has to do with corn and soybeans, but it's a money flow deal, and that's going to continue, sadly.
I was going to say it is about money flow, and so what do you think? Is the stock market just about done going down, or do we have a lot more downside risk?
I wish I could say it's done going down. I think it's going to be a chop fest, up one day, down the next, but I think we're definitely headed into some sort of a recession. What I don't know is how sharp and how long the recession is. If the Fed would come out and raise interest rates sharply, then maybe it's a shorter recession. But no, I'm afraid the outside markets are going to continue to go lower, which a lot of times we think that means money is going to leave the stock market and come into commodities. And maybe they do, especially if we have a summer drought here. But they're already into these markets a lot. We got to remember these funds are very long. If we give them some excuse, change the ethanol mandate, demand more soybean acres. There's a lot of longs that come out too. So I'm talking a lot of bullish numbers, but I also still like hedging, especially those beans here.
The economic concerns that you talk about have been keeping a lid on this cattle market. We got a little bit of a bounce today. The forward spreads were working, but is that because of the discount the futures are holding, or what?
I think so. The discount the futures are holding. The cash market is down this week, maybe $1 or $2, but still June's at a steep discount when normally this time of year it should be at a little premium. So yeah, I think we can't go any lower than that 130 mark. At least the trade doesn't want to right now. But you're right, we can't get the funds to step in and buy because what you mentioned, the outside markets and the stock market, fears of recession. If people are backing off and not buying goods at retail stores like Target and Walmart, then they're probably not going out and buying the high cuts of meat either. But I say all that, and then I see boxed beef prices creeping up the last 2 weeks,
Right.
and really grilling season's just getting started. If I can ever take a sweatshirt off and grill some more ourselves up here, we'd chip in and help too. So I think that demand is coming, and honestly, I think we're near a low here. I think this cattle market can bounce back. Cattle on feed report tomorrow. Once again, we expect those placements to be sharply lower, and I think this time they finally will. I think we got all of them off the winter wheat fields early this year, so the placement numbers should be lower tomorrow, but that doesn't necessarily mean a higher cattle market on Monday, though, either, does it?
Well, let's hope that the market or the report is actually bullish, because last month it was pretty darn bearish. We are due
Yes.
for a better report. What about the hog market? Just some routine profit taking today, or did the futures, that premium that we're holding to the indexes, it gotten a little too far ahead of itself?
Yeah, maybe. Back and forth there. A couple of days ago or a week ago, the June hog position was trading lower than the index. So we had to rally that back up to get back above. Usually we're at about a $6 premium to the index. Well, the index is around that 100, 101. Now we got back to that 105, 106 area. And now the June hogs are kind of in this limbo situation of, do we really have a bullish story to go higher, or do we have to pull back to the cash market? I think cash is going to stabilize here. I know export demand is poor compared to year over year, but I think domestic demand is going to stay strong enough for that cheaper quality of meat. So I think sideways is probably what happens here in the hog market.
Thanks for your insight as always, Dwayne Bussey joining us with Bolt Marketing.